So hello there, 4 August 2023. As we can see, Badala Bam, we're carrying on with the currency mafia. But say our inventor Makam. Currency mafia. I'm the first one to tell you to coin this term. Currency mafia, they are the biggest mafias in Zimbabwe. Those of you that are involved in forex trading will know of a phenomenon called shorting the market. Well, shorting the market is when you believe the market is going to go down, so you short it. In currency trading, the real traders, not these ones that open accounts and put $100, $200 and bet. The real traders in the banks, the way that they short a market, a currency market, is borrowing in a currency that they believe is going to lose value. Okay, in anticipation of that loss of value. Over time, they buy back that currency. Obviously, when they buy the currency back, they will be having more money. So they repay their debt. The remainder is their profit. That is currency speculation. It is a normal thing in a healthy financial system. It is there. There's something called currency attack. You might have heard of this guy called George Soros. You might have heard of the guy called George Soros, whom they say he broke the Bank of England. How did he do that? Essentially, he was putting pressure on the Bank of England because he had access to a lot of capital. Okay, so he was an asset manager with billions of dollars under his supervision. Now, if you have got excessive capital, you are able to heavily influence the currency markets. But there is some of these currency markets that are small, like the Zimbabwean one, the Zimbabwean to a US dollar cross. That cross is really small. Okay. The US dollar, euro dollar pair is very big. By the way, they say that the currency market is a $4 trillion market a day. So for you to be alone to influence the US dollar, US euro is highly impossible. Even US euro, the British pound, Japanese yen, it will take bankers, big banks, even bankers, big banks, many of them, it's hard for them to move the needle. So if there is currency manipulation in banks, it is usually at some point they begin to notice it. So in Western countries, they have got stringent laws, regulations that make it hard for bankers to manipulate. But however, in a country like Zimbabwe, where regulations are lax, and our that currency cross Zim dollar versus US dollar is very small. It doesn't take a lot of money to bring about a meaningful move in the Zim dollar US dollar trade. So given that there are some traders who genuinely and rightfully so trade the Zim dollar US dollar cross, they bet on it, they speculate on it. Okay, they don't have to open brokerage accounts with trading platforms. That's done by small boys who put $1,000, $2,000. But the big guys in the bank, you can just trade on the general market, on the real market. Now, the problem that we have in Zimbabwe is that it's not the people who have billions, no. It's the people who have got access to creation of money. There lies the moral hazard in the Zimbabwean banking system. These bankers in Zimbabwe, because they are linked to ZANU-PF, and ZANU-PF is a law unto themselves, there's no check and balances to my chef Ezano, including the people that are in the banking industry. I do believe that there's some PF people who, not all of them are in it because they probably don't even know it, how it operates. They know about the banking, I mean the banning. I'm not gonna talk about that banning of buying money, having access to US dollars from the Reserve Bank, then selling it in the streets. This is different. This one they don't do it in the streets. This one they do it like in the proper financial market because the bankers have got the access to what is called fractional reserve banking. Kunento kuthiwa i-liquidity ratio. Angithi i-liquidity ratio le isebenza kanje. The central bank set laws for banks and say if someone deposits $1,000 in your bank account, you are allowed to borrow or to lend out more than that $1,000. Maybe bethi 2,000 or 3,000 or 4,000. I want to first of all check what is the liquidity ratio of Zimbabwe because I do not know. Funa ukukhuluma ngento engiyaziyo of Zimbabwe. I-liquidity ratio le is what allows banks to create more money. Okay, bank liquidity reserves to bank assets ratio percentage in Zimbabwe was reported at 33.86 in 2000. No. It's not what I'm looking for. This is not the thing that I'm looking for. Page not found. See here. Bank they're allowed to create money. Essentially, let me just make it clear for people to understand. Most a bank, you ask for a loan from the bank. The bank does not give you the money that they have. Okay. The banks is allowed to create money out of thin air. If you don't understand, it's very simple. You have a bank, give me 1 million. What do? They just type 1 million in your bank account. That's it. Ikhadi lakho laphuma lile 1 million go to the ATM imali yaphuma because it's a process of accounting. So there is a limit to that. There's regulations. I'm trying to look at there's a percentage that is put. Each country has got its own percentage. I'm trying to figure out the Zimbabwean percentage. I do not find it here, but whatever it is, it's not. It's usually prudential. Okay, it's another word. Prudential. Prudence means right, fairly well priced, or into prudent into njani into generally accepted into right. Okay, so my guess is that because I do not know, I don't work in a bank, but we see the smoke, we don't see the fire, therefore we know it's burning. We can deduct from deductive reasoning, we can deduct ukuthi vele amabhanki eZimbabwe ayibreaker that law. They excessively print more money than they are allowed to. And even if uJohn Mangoja sees it, what is he going to do? Angithi vele akunamthetho eZimbabwe. And what they do is that they are able to create trillions of some dollars just like that. Now they don't use those trillions to create jobs or to fund factories, which they should be doing. Okay. In fact, if they print money and build factories and build the economy, we will not have hyperinflation. We will have a higher GDP, not high inflation, higher GDP. Okay. Inflation is caused when too much money chases one thing. In fact, in Zimbabwe, the inflation that we've had was a inflation of the US dollar. The price of the US dollar in Zimbabwean terms is highly inflated. So the excess liquidity that has been created by the banking system in Zimbabwe have gone to buying the US dollar. That is why we have inflation in US dollar. as an asset, the US dollar as an asset, has excessively inflated in Zimbabwe. Because sometimes when we talk about uh, excessive money chasing fewer goods, we think that inflation is going to be shared broadly, equally across the economy. It's not always the case. It depends on what the money that was created bought. So the money that was created in Zimbabwe did not go and buy fruits and vegetables and buildings, whatever. It went to buy the United States dollar. Okay. So as you go to buy the United States dollar, what you see is an inflation, an inflated price. That's what inflation means. Inflation is coming from the word inflated, meaning going up. The price of the US dollar goes up, it is inflated. So the inflation, if you're wondering where it is in Zimbabwe, it is largely in the US dollar. Okay. Historically, in the past 20 years, my argument is that the guys in the banking system who have been excessively printing money have been using that money to chase the US dollar, thereby inflating the US dollar. Now, listen very carefully, economists. I hope you are following me. As the US dollar is inflated, obviously an inflated US dollar vis-a-vis Zim dollar means that the Zim dollar is losing value, right? So as a Zim dollar excessively loses value, input costs obviously also go up, whether it's inputs that are bought using US dollars, they will need more Zimbabwean dollars, therefore bringing inflation into the economy. So inflation there in Zimbabwe, I'm trying to explain where the inflation of Zimbabwe is coming from. I want to be slow. Let me go back. I said printing money, too much money in the system, chasing fewer goods causes inflation. However, however, when that money is printed, it doesn't always happen that we will see prices rise uniformly across the economy at the same time. What happens is through the supply and demand curves is that what is inflated or what experiences inflation primarily is where the money goes to. Like as Zimbabwe inflation a price. There's a price inflation in Zimbabwe. I want to get to the and address how we get there. First of all, the inflation is in the US dollar that is in Zimbabwe. That Zimbabwe's US dollar trade causes the US dollar to be excessively priced, which at the same time means weak Zimbabwean currency. So it is the weakening Zimbabwean currency that causes the broader inflation in the economy, because the other inflation and price inflation of goods and services is caused by a weakening Zimbabwean dollar, of which the Zimbabwean US dollar, the Zimbabwean dollar's weakening is caused by excessive money printing by bankers who use that money for the purposes of shorting the Zimbabwean dollar or betting against the Zimbabwean dollar in the currency markets. That is why during the government of national unity, please follow me slowly. During the government of national unity, when we had the US dollar, there wasn't much inflation in Zimbabwe. In fact, there were fears of deflation. Why was that? It was because there was no one who was excessively printing money. We could not print the US dollar. I get you. When we've got Zim dollar, we print Zim dollars unabated. These bankers, they use that to cause inflation of the US dollar in Zimbabwe, which is loss of a Zimbabwean currency valuation. But only in a US dollar regime, John Manguja, the Reserve Bank of Zimbabwe, are not able to print more US dollars in Zimbabwe. They did that through these coins, their RTGS coins, whatever. But before that, they were not able to monetarily expand our economy. That is why there was stability in pricing in Zimbabwe during the years of GNU. This explains why before GNU prices were escalating, and after GNU, when we reintroduced the Zimbabwean dollar, prices started going up again. So I'm trying to say to you that the prices that went up, those prices did not go up because of some other fundamental issue except for the currency devaluation. Okay, so I'm pinning all prices in Zimbabwe, the inflation in Zimbabwe, I'm pinning it on one thing, on the Zimbabwean currency losing value. Meaning that if the Zimbabwean currency were not to lose value, you will not experience inflation in Zimbabwe. So the inflation that you're experiencing in Zimbabwe is a product of the Zimbabwean dollar losing value. Keep that point. The inflation in Zimbabwe is caused by the US dollar, by the Zim dollar losing value against the US dollar. Okay, meaning that if you have to stabilize the Zimbabwean dollar, there will be no inflation in Zimbabwe. I justify that by taking you back to the years of the government of national unity, when we had fears of deflation. We had deflationary fears there, not inflationary fears. There were no expectations of inflation during those times. For all 5 years, there was stability in the macroeconomic condition in Zimbabwe. So what my argument is that there is no problem in the fundamental economy of Zimbabwe. This thing of we need to fix the fundamentals, there's no problem. I argue there's no problem in the fundamental economy of Zimbabwe. We have got a thriving mining industry, we've got a thriving agriculture, not thriving, but there is an agricultural industry that is growing, and the service sector, everything is fine, just like all other small economies around the world. That because the economy is small, does not mean you should have hyperinflation in a country. Our inflation in Zimbabwe, you need to understand, all inflation, they've got a source, different sources. It's not always the same source. So I put it clear to you, Zimbabwean economists and Zimbabwean people at large, that our inflation is really caused by the Zimbabwean dollar losing its value. And now that I've pinned it on the Zimbabwean dollar losing value, now we are going to investigate. We go to why does the Zimbabwean dollar lose value? And I told you that Zimbabwean dollar loses value because of the currency manipulators who excessively create money through the fractional reserve banking system, because they have got access to that money in the banks. They're able to make those decisions. They're made to create excess liquidity for one purpose only, just to buy the US dollar. If that excess liquidity was used to buy tomatoes, the price of tomatoes will go up vis-a-vis price of everything else. So what we see in this economy is that we saw the price of only one thing going up dramatically, only one thing. Do you know what it is? It is the US dollar. And that price of the US dollar going up, because the price of the US dollar is attached to the price of everything. Therefore, you get to have everything else going up. Then you experience this inflation in the system. And who benefits? Okay, there is a transmission of value across the line from the value that is held by the Zimbabweans. At the end of the day, the one who benefits is the currency manipulator, the one who borrows, who creates excessive liquidity, which we can call fake money, because they have got access to that money. They create that excess money, they buy US dollars. When all of those inflation happen and then they reverse the trade, they are left with the profits. So it's a dynamic siphoning of funds of all the Zimbabweans, towards these people who are involved in this currency trading. Okay, it is different from the ones that are banning. Banning is a similar issue. This banning that is characterized by people who have got access to US dollars in the reserve bank, then they go to the streets and sell them at a different price. That one is arbitrage. Arbitrage takes advantage of the difference in pricing in the reserve bank and the prices in the street. So through arbitrage, you can keep going back and forth and make profits, buying at a lower price and selling at a higher price in the streets. That is arbitrage. But the one that I'm talking about is not money making through via arbitrage, but it is one via actually changing the price of the US dollar even within the Reserve Bank itself. Okay. Just like we have now, the Zimbabwean dollar moved from 1 is to 1,000 to 1 is to 6,000. That is even in the at the Reserve Bank. So that is a currency manipulation, making money through currency manipulation without the use of arbitrage. So the arbitrage idea has been very much well articulated in Zimbabwe. People know about it. But this manipulation that is caused by excessive money printing in the bank is underappreciated and underreported and not discussed. Yet this thing has been going on for many years, which begins to inform me that if this thing has been going for over a couple of decades, it means that the people that are doing it have been able to lie low, and those that are able to fight to govern them or to police them have been sleeping on the job, or worse, are actually the criminals. Meaning in Zimbabwe, our financial regulators and our financiers are the ones that are bleeding us dry. They are the ones who are breaking the financial laws because the avenue is not yet known by most people, even including the people in government. They always say to General Chiwenga that your people are your assets, they're not your problems. The war of the Bush in the 1970s was in the 1970s. Now the war is different. Now we've got currency wars. So Zimbabwe is experiencing a currency war. Now, it is possible that some of the people that are involved in these currency wars might not be Zimbabweans. It might be a mix. Of course, obviously, Zimbabweans are involved by and large, the bankers in Zimbabwe. It's also possible that there's also other foreign agents who can use Zimbabwean financial institutions for that purposes. It's also possible that you can, if you are a foreign entity with billions and with the interest in doing this thing, you can deposit billions in a Zimbabwean bank, so that its liquidity ratio allows it to create more money, right? And after that, withdraw your money. Understand? So it is possible. If if we were to investigate, that's another thing that we can check. Check a look at balance sheets of the banks in Zimbabwe, their deposits. Do we see a surge in deposits? Is there a time when there's a surge in deposits, and then are increasing their ability to create more money that is used to bet against the Zimbabwean dollar? Then if you're investigating, you can check that and begin to see that, okay, who deposited? If it is a foreign entity, then you are able to see, okay, so this foreign entity, because perhaps the liquidity ratio is at this level, they wanted to increase the bank's ability to increase the amount of money that they can create. Well, one way of doing it is to adding deposits, right? But if you've got assets, access to billions of US dollars from outside the country, you can do that, liquidate the bank, thereby allowing the bank to be allowed to create more money and use that more money to bet against the Zimbabwean dollar. Or we still break the laws, break the liquidity laws, create excessive ZIM dollars into the system and use that to bet against the Zimbabwean dollar. So, in a situation like this, there's, there's two answers. It's either we heavily police our Zimbabwean dollar, or we suspend the Zimbabwean dollar and use US dollar for now. But the problem of suspending the US dollar and using the US dollar is that it is not a long-term solution. It is a short-term solution. The government of GNU achieved that. Now, I do not know that the government of National Unity did that to address this issue, or by accident it so happened that the issue was addressed. Because during the government of National Unity, I never heard them talking about this issue. I heard them talking about the arbitrage, money that is made via the arbitrage avenue, but not really via this excess liquidity in the market that is used to bet against the same dollar. But bringing the US dollar actually closes that door, because they're not able to print excess US dollars. Okay. So, but then it is a short-term measure, because if you bring in the US dollar, it means that you don't have sovereignty of your currency, of a currency. Therefore, we are relying on the whims of the US Reserve Bank governor, who makes policy according to the economic conditions of the United States of America, not of Zimbabwe. So it is necessary for the Reserve Bank of Zimbabwe to have their own currency for the purposes of driving policy for Zimbabwe. But as it turns out, our Reserve Bank in Zimbabwe, if I see them and charge them, they are not doing their job. The Reserve Bank of Zimbabwe is not coming up with policies to address unemployment, to address the economic conditions of the country. On the contrary, they're in the business of looting from the Zimbabweans. So perhaps, though it is a noble idea for a central bank to run its own currency, perhaps the ones that we have right now in Zimbabwe are not the right individuals to write a currency, to run a currency. Because if we allow them to run a currency, they are running that currency for the purposes of stealing, of siphoning public wealth into private hands via the system I've been explaining. So closing that loophole would be surrendering to the US dollar regime. But surrendering to the US dollar regime is actually surrendering your sovereignty as a currency issue. Because one thing that differentiates countries, or that makes a country, it is the issuance of currency. A country is a country because it issues its own currency. If it doesn't issue currency, then it is just a province of the country that issues currency. So if we use the US dollar as the official currency in Zimbabwe, then it means the United States is the mother country. We are just a province of the United States. But however, the trouble is that there's a dislocation in the economic variables of Zimbabwe and of the United States. So when the Reserve Bank makes decisions, they're making decisions for the sake of the 50 states of America and Guam, Hawaii, those places, not for Zimbabwe. So a policy, if the policy direction must be going north to help Zimbabwe, but going south to help America, the Americans will go south to help America. They will not go north for the sake of Zimbabwe. Hence the need for currency independence. But that independence of currency carries with it a responsibility. So you need to be responsible. If you're not responsible, there's a risk that the guy who handles the currency of your country is against you. In the case of John Manguja, Itim Nangakwa, and what is his name, Thule Ncube, the people that are up there currently, I mean, for the past 20 years, they have been mismanaging that currency. And the mismanaging is an understatement. They have been managing the currency for the purposes of siphoning wealth of everyone on a large scale, year after year. And this point cannot be stressed enough. You know, I feel bad because I feel like I am not heard. I feel like I'm being ignored. Yet I am speaking about the real thing. Nanti Sela, these are the people that are stealing your money. People are just ignoring. They're busy saying chat. It's part. Okay. We're going to stop the video here. Have a great day.